In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs because they don't want to pay 25, 50, or 100% tariffs, so they're moving them back to the United States. I spoke to Tim Cook this morning, and he's going to, I think, even up his numbers, $500 billion. He's going to be building a lot of plants in the United States for Apple, and we look forward to that. I really do look forward to that. But the talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We made a great deal with China, great trade deal. But it was a much bigger deal originally, and then they canceled it right in the last day. Some of you faces I remember were there when that happened. I remember you. And we had a deal where they opened up their country to trade with the United States. And they took that away at the last moment, and then I canceled the whole thing. And then 6 months later, we ended up doing a smaller deal. But it was a big deal. It was $50 billion worth of product that they were going to purchase from our farmers, et cetera. And we agreed to that. People thought it was 15 because they were doing 15. We made it 50 because I misunderstood the 15. I said, you got to get 50. Because when I asked, if you remember the story, when I asked, what are we doing with them? My Secretary of Agriculture at the time, Sonny Perdue, said, sir, it's about 15 billion and we're asking for 15. And I thought he said 50. So I said, so they came back with the deal at 15. And I said, no way, I want 50. Because you said 50. They said, sir, we didn't say that. Anyway, bottom line, I said, go back and ask for 50, and they gave us 50. And they were honoring the deal, and we would call them up a lot for the corn and for the wheat and for everything. They were honoring the deal, and then when Biden got in, they no longer honored the deal. There was nobody to call, and they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace. China will also suspend and remove all of its non-monetary barriers. They've agreed to do that. Well, they're very numerous. But again, to me, the biggest thing that came out of that meeting is they've agreed. Now we have to get it papered, but they've agreed to open up China. It's going to be great for everybody.
Hey everyone, welcome back to the channel. Today, we're diving into the wild world of tariffs. Those pesky taxes on imports that can make or break economies. We'll unpack their pros and cons, skim through their history, and zoom in on the U.S. China economic relationship. A high-stakes dance that's got the world on edge. What happens if these two giants decouple? Let's find out. First, what's a tariff? Simple. It's a tax slapped on goods coming into a country. Think of it like a cover charge at a club, but for imports. Pros? Tariffs can protect local industries. If American steel is getting crushed by cheap Chinese imports, a tariff hikes the price of that foreign steel, giving U.S. companies a fighting chance. It's like a shield for jobs and homegrown businesses. Tariffs also bring in government revenue, money that can fund roads, schools, you name it. And in a pinch, They're a geopolitical tool, a way to flex muscle without firing a shot. But here's the flip side. Cons: tariffs raise prices. That cheap TV from China, not so cheap anymore. Consumers, aka you and me, feel the pinch. They can also spark retaliation. If the U.S. tariffs Chinese goods, China might slap tariffs on American soybeans or iPhones, hurting farmers and tech giants. Worse, tariffs can disrupt supply chains, slow trade, and even tip economies into recession if they spiral out of control. It's a gamble, and the stakes are high. Now, let's rewind for a quick history lesson. Tariffs are as old as trade itself. Ancient empires taxed goods moving through their ports, but things got spicy in the 18th and 19th centuries. The U.S. used tariffs to fund its young government and protect fledgling industries. By the 1930s, though, the Smoot-Hawley Tariff Act cranked tariffs sky high, worsening the Great Depression as global trade collapsed. Lesson learned: tariffs can backfire. Post-World War II, the world leaned toward free trade, with agreements like GATT and later the WTO pushing for lower tariffs. But lately, tariffs are back, baby, especially in the U.S. China showdown. Speaking of which, let's talk about the U.S. and China, economic superpowers locked in an uneasy embrace. The U.S. relies on China for everything from electronics to clothing, while China needs American markets to keep its factories humming. It's a marriage of convenience, not love. Since China joined WTO in 2001, trade exploded, but so did tensions. The U.S. accuses China of unfair practices, subsidizing industries, stealing tech, and keeping its currency low to boost exports. China, meanwhile, sees the U.S. as a bully trying to contain its rise. Enter tariffs. In 2018, the Trump administration hit China with tariffs on billions in goods, targeting everything from steel to solar panels. China fired back, taxing American agriculture and tech. Biden kept many of these tariffs, adding targeted ones to curb China's tech ambitions, like restricting semiconductor exports. The result? Higher prices, disrupted supply chains, and a global economy walking a tightrope. Data from 2023 shows U.S. China trade dropped 11.6% to $575 billion, the lowest in years, as both sides started decoupling, untangling their economies.